let's jump right into this explainer on the wildly debated, high-stakes world of corporate taxes.
Get this. In 2020, 55 massive, highly profitable U.S. corporations paid absolutely zero federal income tax.
Which begs the billion-dollar question, right? How do these mega companies legally pay nothing at all?
Take Tesla. They raked in $10.8 billion in U.S. profit, but their effective tax rate? Just 0.4%.
Thanks to the 2017 tax law, the average effective rate for top corporations plummeted to just 12.8%.
So how did we actually get here? Let's rewind a bit and check out the historical timeline.
Pre-Reagan, higher corporate taxes funded a quarter of federal revenue, heavily encouraging domestic reinvestment into everyday workers.
Interestingly, Reagan himself actually reversed course in 1986, slamming massive loopholes shut to boost corporate accountability.
But since then, administrations on both sides have let new tax breaks and loopholes totally spiral out of control.
Today, the U.S. collects a measly 1.8% of GDP in corporate taxes. That's under half the OECD average.
Companies use wild accounting gimmicks to shift profits, reporting literally mathematically impossible earnings in tax havens like Bermuda.
Plus, many huge enterprises now operate as pass-through businesses, entirely dodging the corporate income tax system altogether.
So who's cashing in? A whopping 40% goes to foreign investors, while the poorest get just 1%.
Because stock ownership is so skewed, these massive tax breaks drastically worsen racial wealth inequality right here at home.
The irony, these corporations rely completely on taxpayer-funded infrastructure, education, and legal systems to build their incredible wealth.
To fix this, progressive policy groups are pushing the American Ideas Plan for major corporate tax reforms.
The big pitch? Return to pre-Reagan rates, enact a strict minimum tax, and finally close those offshore loopholes.
They also want to tax large pass-through businesses, ensuring every massive enterprise pays their fair share.
Proponents argue this revenue is absolutely vital to reinvest back into workers through childcare, education, and better infrastructure.
Plus, bringing in that extra cash could seriously help stabilize our currently skyrocketing national debt-to-GDP ratio.
While progressives want this to fund public goods, conservatives argue lower taxes are totally essential to spark economic growth.
Interestingly enough, legal experts say these corporate tax reforms are rock solid and highly unlikely to face Supreme Court challenges.
Ultimately, strong corporate taxes ensure these mega companies actually fund the very society that makes their massive success possible.
So, what do you think? How should we balance corporate incentives with funding the public infrastructure we all need?